Support comes from the Missouri Forest Products Association, providing more than 41,000 jobs in the production of wood pallets, railroad ties, white oak barrels, hardwood floors, and more. Details at choosewood.com.
From St. Louis Public Radio. This is St. Louis on the Air.
You look at companies like Facebook and Snapchat and WhatsApp, and all of these companies were at one point invested in by VCs. Most VCs kind of invest in the same things over and over again.
So the rule of thumb generally is of 30 companies in a portfolio, generally you'll have maybe one that goes 100x in valuation return. It's fairly rare to be looking for moonshots.
93% of partners of venture capital firms are men who are white.
So do you see your job in part as letting people know, hey, we're here, come to us, we want to invest in you? I'm Sarah Fensky. Venture capital firms play a key role in launching the next generation of businesses, but far too often they're investing in white-run companies. A recent study found that 78% of partners at firms earning VC funds in 2020 were white. 15% were Asian, just 3% were Black. A St. Louis firm is doing its part to change that and put more money in the hands of diverse entrepreneurs. The partners at the helm of 6-year-old Ascend Venture Capital are both racial minorities. And of its 18 portfolio companies, 7 are led by underrepresented founders. That includes Lisa Morales-Hellebo. She is the CEO of Refashioned OS. That's a data and logistics startup aimed at helping fashion companies make their supply chain sustainable. Lisa learned the hard way that VC funding sometimes has very little to do with a company's growth potential.
For my previous tech company, I had VCs say the craziest things to me. I'd walk into a room, and the first thing out of their mouths would be something like, "Sweetheart, you're so pretty. You should just marry better like that Tory Burch." And I'd say, well, how many male founders have you ever started a pitch conversation like that? I hope it's 0, and I'm embarrassed for you. So, that is all too common, yes. But it's more a matter of these people just automatically discounting your value because you don't resonate with them.
Now, Lisa Morales-Hellebo says Ascend is different, and the company is now launching a targeted opportunity fund that would invest additional funds beyond its normal levels. Lisa says that can make a huge difference for companies in their early stages.
This venture community I've seen over my 27 years in tech tend to be followers, not leaders, not disruptors. They tend to look for signals and the same playbook and have a comfort level in their pattern matching. And what they're missing out on is massive. So I think that his impact fund is going to change the game for companies like my own and everyone else that is lucky enough to get this capital.
And that is Lisa Morales-Hellebo. She's the CEO of Refashioned OS. And joining us now for more on Ascend and its new opportunity fund is Yinka Faleti. He is the former Democratic nominee for Missouri Secretary of State. He's the former executive director of Forward Through Ferguson. And as of April, he is a partner in Ascend Venture Capital. Yinka, welcome back.
Thank you, Sarah. Great to be here.
And we're also joined today by Ascend's founder and general partner, Dan Connor. Dan, welcome.
Thank you. It's great to be here with you.
So, Dan, those stats that I quoted above, those seem pretty sobering. Only 3% of these companies receiving VC funds have Black founders, 78% white-owned. What's driving those massive disparities?
Yeah, first off, it's completely lamentable. We like to say around the office that no geography or demographic has a monopoly on brilliance. It crops up anywhere, in any circles. And the fact that transformational businesses are getting started in these areas and are getting underfunded is terrible, and it has some very systematic implications. So there are 3 reasons why this situation tends to perpetuate, I think. The first is pattern matching, as Lisa was saying, as venture capitalists tend to do, and frankly, many investors outside of the private markets. We tend to see past successes and attribute certain attributes to those, and then try and look for the same situations in the future. And that just tends to lead to making the same investments over and over. And the fact that this situation is already pervaded just means that continues in the future. Another reason is because there's a focus on repeat founders that's fairly unfair. When you think about it, every one of those repeat successful founders, folks who've started businesses in the past and successfully exited and are going on to a new venture, they previously were first-time founders to begin with at some point. And so the investors who passed on them because they weren't repeat founders at that point would have missed out on that transformational opportunity. And the third reason is the composition of the venture capital teams themselves tends to be fairly skewed as well. 92% of venture capital investment partners are white male. So those partners don't tend to see themselves see the opportunities in the companies that they're reviewing. How would you if you don't have the diversity of background represented at the table to review an opportunity for its potential? So those three reasons tend to contribute, I think, mostly to this problem.
So you founded Ascend Venture Capital 6 years ago. At that point, did you set out to consciously do things differently?
Absolutely not. Actually, we're founded simply on a thesis of a paradigm shift that's underway right now, in which every company needs to become a data company overnight, and crafting the investment decision itself to be as efficient and optimized as possible meant that we crafted our deal review process to be founder blind until we were fairly convinced in the process that the business is a good idea. And simply by doing it that way and how we do our deal sourcing as well, that has meant that a high proportion of our companies have emerged as great opportunities and also happen to be founded by diverse teams.
So you're saying you did this founder blind. You were evaluating the company just on its merits, and as opposed to just doing a handshake deal with some dude you already know.
That's exactly right.
That sort of opened things up.
That's exactly right, yeah. And now we've made 18 investments, and 7 of them actually are founded by diverse teams. And actually, when we dug into the numbers, it turned out that 62% of our deployed capital had gone to those 7 teams. So the majority of our capital to those teams. And that's because we, in the venture capital game, you tend to double down on your winners.
Yeah. Well, that's exciting to hear how that has worked out so far for us. And Yinka, this is something that is pretty new to you. You've been there like a month and a week or two.
That's right.
You've been in law, you've been in politics, you've been in the nonprofit world. What made joining this firm appealing to you, getting into venture capital?
Yeah. Well, venture capital is such a huge part of what is creating the future of wealth and either equity or inequity in our society. The last 250 years of this country have seen mass inequity. And we have an opportunity to right the ship in this post-George Floyd era. And when I was wrapping up the campaign and I was thinking about how next do I best leverage the goodness of all of that, the 21-month process of campaigning, what do I do with that? And my North Star is impact at scale. And I began to see the power of venture capital to be a lever for creating equity economically. And that's what this is about for me. It's impact at scale. For me personally, as you know, I'm a graduate of West Point. And we were a poor immigrant family growing up. We were not connected. We were not in the who's who. And so many folks don't get that opportunity if they're not necessarily already in those societies where those opportunities present themselves. So I would have been, in venture capital speak, maybe a founder that would have been overlooked.
Yeah.
And so this resonates with me personally because I understand that there are so many stones that are not turned over where there are brilliant folks with incredible ideas that will transform our society for the better if we only look there, if we only give them the opportunity.
So do you see your job in part as letting people know, hey, we're here, come to us, we want to invest in you?
Well, that's part of it. That's part of it. And part of it is creating access into new communities where access did not previously exist. As you heard Dan say, 93% of partners of venture capital firms are men who are white.
Yeah.
And those folks may not live in communities that I have had the opportunity to grow up in, or may not know the people that I have had the opportunity to know, et cetera, across all of my life experiences. So this is incredibly unusual to have two partners who are not men who are white. And so that opens up a whole spectrum of opportunity to folks who don't even have the access to venture capital, who now will, just because of who Dan and I are.
And so, Dan, you're, in addition to bringing on Yinka and really sort of making a play for this underserved market here, you're also starting this new opportunity fund. How is this going to work?
So an opportunity fund traditionally is focused on doubling down on winners with a separate fund. And that's what the Ascend Opportunity Fund is set up to do as well. It just so happens that many of our winners are founded by diverse teams, and so this fund is specifically geared to provide additional opportunities to those teams. The way that the pattern has emerged is as a micro VC with less than 50 million in AUM. I'm sorry, what's AUM? Assets under management.
Thank you.
My apologies. The way that we have run our operations is to pass off the opportunity to invest in our winners to our capital partners who have come to trust us for those opportunities, like the big names in venture capital, like Sequoia, Menlo, Founders, SoftBank, the household names of venture capital who we work with to provide our best companies for their subsequent investment. But we were finding that the opportunity to double down on these winners would be great to have in house. So now we're bringing that opportunity to our network.
And there's people with these funds that want to invest in this specific opportunity fund.
That's exactly right. Yeah, there's actually a lot of latent appetite in this region, and also burgeoning in the world for this type of fund.
So, Yinka, you have a lot of connections in St. Louis. That's what happens when you run for office as a Democrat. You tend to get to know everybody in town. This is a very Democratic town. Do you feel like there's a lot of companies in St. Louis that are ripe for what you guys are looking for?
I think so. I think there's a terrific amount of appetite from individuals, from high net worth folks, from corporations who see the opportunity, who are finally getting it and are looking for something like this. So I think the opportunity is great, not only in this region and across the state, but throughout this country.
Hmm. So then you get people coming to you and they say, we want you to invest in what we're doing. We believe in what we're doing. How do you separate people who seem like they have a good idea from the people who really have a good idea? You've said you take an encyclopedic approach. How does that work, Dan?
Oh, yeah. So we have the way that our deal review works is we take it as similar to how Michael Jordan used to score an average of 40 points per game. When asked in interviews, he would say he breaks it down to smaller increments. You got to score 10 points a quarter. You've got to score a certain number of points per minute. But there isn't that much time in each quarter to do that, so he had to work to stop the clock and get to the free throw line so that he could score that many points. We do the same thing. So we, for every 1,000 companies that we look at every single one by one, and we'll end up reaching out to about 7 or 8. At that point, that's when we really start to build a relationship with the founder. So of those 99% companies that get eliminated, we're finally starting to think that this company is a good idea before we talk to that founder. And then of every 7 or 8, we make a new investment roughly every 1,000 companies.
So this is really, I mean, you guys are going deep in the weeds on
right.
for these companies.
Yeah. So, we literally review thousands and thousands of companies. And I think there's no substitute for it. In the private markets, there isn't that much information about every new company that's starting. So it's difficult to be able to know that a space is very busy with competitors. And so that encyclopedic knowledge of what's a common theme among companies starting up is crucial.
Dan, I understand you've described yourself as a unicorn hunter. What does that mean?
So there are 2 ways to do venture capital. One is to try to build a portfolio of doubles and triples, essentially, to use the baseball theme.
Just sort of solid performers that can make a small profit.
That's exactly right. Yeah, so that tends to be a regional focus in the Midwest specifically. So it's fairly rare to be looking for moonshots, and so that's essentially what we're doing. Based on our track record so far, we've been very successful at it. So the rule of thumb generally is of 30 companies in a portfolio, generally you'll have maybe one that goes 100x in valuation return. And of the rest, 9 of them will be doubles and triples, and the rest will return less than $1 on every dollar invested. And so far, of our 18 companies, we've seen 3 go to home runs. We have shots on goal for another 2, and we've only lost money on 2. So we're completely flipping that model on its head, and I think that's a direct result from this encyclopedic approach.
Yeah, so it feels like that strategy is really working. That's exciting to hear. Yinka, you talked a little bit about why you were interested in getting into the venture capital world. What kind of impact do you think this fund can have and companies like this can have, big picture, looking ahead at the future of our country, at the future of this region?
The opportunity is limitless. I mean, it's limitless, really. When we talk about the power of venture capital, and you look at companies like Facebook and Snapchat and WhatsApp and all of these companies that are changing the game, these companies were at one point invested in by VCs.
Yeah.
And look at the effect that they've had on our lives. And we don't even know what effect the current companies we have, the current ones that we believe will be home runs. I mean, it's limitless what this could do. And for the founders, their families, their communities, this is not one of our companies, but it's been in the news lately. There's a woman who runs a company called Slutty Vegan. And it has done phenomenally well. She's based out of Atlanta. And what she's done is she's planted her operations in communities that are traditionally underserved. So the economic activity for those communities, it's life-changing. You're talking about people being able to work, to save money for college for their kids, to thrive, where they wouldn't have had that opportunity prior. So this is a big deal. And as Dan said, and part of why we've seen the success that we've seen is, most VCs kind of do it like American Idol. That's how most VCs do it. And they kind of invest in the same things over and over again. We kind of do it like The Voice. We don't turn around until we love The Voice. And that's made all the difference.
I love that metaphor. A singing competition in VC. I feel like I need to go watch The Voice to figure out how they do it. But I think I've gotten a glimpse at that today. Yinka Faleti, I want to thank you so much for joining us today.
Thank you so much, Sarah.
And Yinka is now a partner at Ascend Venture Capital. He is also, of course, the former candidate for Missouri Secretary of State and the former executive director of Forward Through Ferguson. Dan Connor, I want to thank you for joining us.
Thank you.
And Dan is the founder of Ascend Venture Capital, and he's also general partner there. This episode was produced by Danny Wissentowski with audio engineering by Aaron Dorr. Our production intern is Avery Rogers. This podcast was mixed and edited by Aaron. Our executive producer is Alex Hoyer. St. Louis on the Air is a production of St. Louis Public Radio. Understanding starts here.
Do you find yourself regularly listening to episodes of St. Louis on the Air? Suggest us to a friend you think might enjoy our conversations. And leave us a review and rating on Apple Podcasts on the App Store. It's the simplest way to help people discover our show. Thanks.
St. Louis Public Radio is a member-supported service of the University of Missouri St. Louis.
Support comes from the Missouri Forest Products Association. Missouri produces wood pallets, railroad ties, white oak barrels, hardwood floors, and more. Details on the variety of products made in the state are at choosewood.com.